everyone everyone is talking about market hitting almost 30,000. But what are the assumptions behind this rally, and what if the assumptions go for a toss? Hey folks, see Rachana Ranade here, and I welcome you all to a very interesting video wherein we are going to do a market forecast for 2026. In today's video, we are going to answer three important questions. Number one, who has given these targets and what's actually driving these targets? Number two, what does technical analysis tell us? And number three, when can these predictions fail? So the video is extremely important. Keep on watching the video till the end. Before we move on, if you can dedicate just one weekend to upgrade your skills, I highly recommend this 2-day free AI training by Outskill, who is the partner for today's video and also the world's first AI focused education platform backed by top AI founders and investors. It's a live 16 hours program happening this Saturday and Sunday from 10 a.m. to 7 p.m. And though it's valued at 10,000, you will get it absolutely free because you are a part of our community. In this 16-hour live interactive training session, you will learn things like prompt engineering, no-code data analysis, and a lot more. Plus, you will learn how to build your own personal AI toolkit using 10 plus cutting-edge tools that are transforming industries, automate repetitive tasks, and analyze data without writing any code, develop AI agents and tools that give you a strong competitive edge. Over 1 lakh professionals from 40 plus countries, including those in tech, sales, marketing, HR, and business, have already joined this workshop. I'm getting my entire team to attend this, and you should too. Seats are filling fast. Use the link in the description to book your spot. Join the WhatsApp group for updates, and don't miss the 10 a.m. live session this Saturday. Now, first things first, we are going to understand who has given these targets and what are the assumptions behind these targets. By the way, all these targets are for year ending 2026. These targets have been given by global investment banks, research firms, someone like JP Morgan, Morgan Stanley, and Goldman Sachs. So, first things first, JP Morgan, they came up with their report on 27th of November. Their target for Nifty 50 is 30,000. Goldman Sachs came up with a report on 10th of November, and their target for Nifty 50 is 29,000, whereas Morgan Stanley on 18th November gave a target for Sensex. Their base case scenario target is 95,000 and best case or bull case scenario target is 1,07,000. So roughly this translates into a Nifty 50 target of 32,000 plus. And as I shoot the video, Nifty is barely above the 26,000 mark. So these are big numbers coming up for year ending 2026. So now what am I going to do is I'm just going to tell you top 2 highlight points from all these 3 reports and why they feel that Nifty will go up to around 30,000. First, we'll talk about JP Morgan. Now, number one assumption that they are doing, or the base for their study, they believe that there is a supportive fiscal and monetary policy environment because of which markets will move up. Now, what do we mean by a supportive fiscal policy? Basically, we have nice tax breaks. Everyone understands that currently, if anyone is earning up to 12 lakh rupees, for that person, tax liability is going to be zero. That's an example of a supportive fiscal policy. Now, what about a monetary policy? Good environment for a monetary policy. The best example is of a likely rate cut in the month of December 2025. Everyone understands that if there is a rate cut, this will automatically give a boost to the overall capex cycle plus a boost to the demand as well. So all in all, both these points can help the market go higher. This is one assumption based on which they believe that market may go up. What is one more assumption by JP Morgan, or what is their base for their study? They believe that currently the domestic sectors are going to give a good boost. So basically, any company who is supplying to the domestic sector, they are favoring them more as compared to exporters. Why? Because currently still India US deal has not been struck. So they believe that the domestic growth story itself is so strong that it can help boost the overall demand in the economy. And they have mentioned that if the US and India trade deal gets a green signal, this can further trigger a near term re-rating for the economy as a whole, right? So all in all, they are mentioning 2 points just to wrap up. Number one, good fiscal and monetary policy, and number two, strong domestic demand. And if US India trade deal happens, that can further boost the sentiment. Okay, that's about JP Morgan. Moving on to Goldman Sachs. They have given a target of 29,000. First point they mention is about supportive macroeconomic conditions. They are also talking about rate cuts, financial policies, and monetary policies, basically, the rate cuts again, which will boost the demand and boost the consumption across sectors. The second point that they are talking is about recovery in earnings. And they are saying that the profits of companies can grow more strongly in 2026. They are saying from around 10% this year to around 14% next year. So they are saying growth in earnings by almost 10% in current year and growth in earnings by almost 14% in the coming year. So these are the top two points for Goldman Sachs report. What about Morgan Stanley? Number one, again they are saying monetary and fiscal policy. Same point. I'm not going to repeat that. Second one is about again earnings growth. Same point that we discussed in the previous one that Goldman Sachs mentioned. But they are saying instead of 10% and 14%, they believe that EPS growth may happen at 17 to 19% at an annual rate for financial years 25 to 2028. So I'm repeating, they believe that EPS will grow at 17 to 19% from financial years 25 to 28 under favorable conditions. One more point that I would like to mention that they have very clearly mentioned in their report is about oil prices staying below $65 per barrel. For an economy like us who is importing crude oil, it's one of our top imports. If oil prices remain low, it's going to be an absolute positive point for us. Number two is about easing the global trade tensions. The point that I was mentioning that if US and India trade deal actually happens, that's going to be a positive point. And overall, they are saying that there could be a stable growth in over the globe. So this is about all three reports. But I hope you have already understood that there was a common point between all of these three reports. Which was the common point? Number one, all three reports talked about a strong fiscal policy. All three reports talked about a strong monetary policy. All three reports talked about good corporate earnings. This is about fundamental analysis, but what do the technical indicators say? So I've taken out Nifty 50 chart on a weekly basis, and for those who have done my course on technical analysis, I'm sure you'll be easily able to tell that this is a very clear textbook pattern, cup and handle pattern. It's a breakout, it's a retest, and right now we are in the bounce phase. Okay, now, in such cases, how do we actually come across a target? Typically, target number one would be this handle which gets replicated here, and this could be like a short term target which comes up to barely 26,500. Now you might be like, Rachana, everyone is talking about 29,000, 30,000. Wait, the ultimate target in a cup and handle pattern is this whole cup. And if I were to replicate here this target, of course from the breakout, this candle now, I'm going to delete this candle now will come to around 29,055. So I hope you have understood that based on technical analysis as well, we are reaching near 29,000. This is about technical analysis, but whatever assumptions we talked about in fundamental analysis, what if these assumptions go for a toss? But first, let's quickly talk about the assumptions one more time. Number one, it was about the fiscal policy, tax breaks. Has it already been taken care of? Yes. Number two is about the quarterly earnings growth. That is definitely we have to watch out for. If Q3 numbers are not good, I'm not saying that 29,000, 30,000 will never happen, but it may happen at a delayed time. So Q3 numbers we have to watch out for. And the ultimate one is about the monetary policy. Now, why am I saying this in a different way? On 28th of November, just before few days, we released the GDP data, and India's Q2 GDP data is at 8.2%. Are we happy? Absolutely yes. It's a very strong growth. Now what happens is that in such a good growth scenario, if we do a rate cut again, because the third assumption was about the rate cut, if we do a rate cut again, this could be something like an overheated growth, and I'm sure RBI would want sustainable growth, not an overheated growth. So RBI may say, Array, anyways, we are getting a good growth rate. Why not delay the rate cut? Okay. If that be so, then the whole assumption goes for a toss because everyone is expecting the rate cuts to happen in December. But if they were to push it back, maybe somewhere around in February 2026 or even April 2026, in that case, now the sequence will be something like delayed rate cut will be equal to delay in sentimental boost. So what will happen in this case is that the 29,000, 30,000 target would still be intact, but it will definitely delay the target. We may not be able to reach it by the end of 2026. So I hope you have understood about who gave all these market targets, what were the assumptions behind this, what was a common assumption for all these three big institutes. We understood about the technical analysis, and one key point is about the rate cut. I hope all these 5 points are clear. What is your target for FY26 or calendar year 2026? I must say, please let me know in the comment section. And if you like today's video, please don't forget to smash the like button. I hope you have subscribed to the channel. If not, do subscribe to the channel right away. I'll see you in the next one. Till then, take care. Jai Hind and bye bye. You might have come across such advertisements on various social media platforms. Please note, all of these are fraudsters promising unbelievable returns through stock tips. I don't provide any calls or advisory services. I provide only educational content through my social media handles and through my website rachanaranade.com and rachanaranade.in.